Okay, welcome to 21-2 Work Together. We're doing some deferrals here, journalizing them, and then looking at how they affect some T account balances. So I'm just going to scroll through this quick because it looks a little different. Normally we have steps, but Aplia this time decided to put it all together. So we have some transactions that are for Bowie Law Firm. And as you scroll down, we're going to journalize here and put them in T accounts. And then down here is the same transactions, except they're for the other corporation called Johnson Corporation, where we will journalize a couple here and then how they affect our T accounts. So, scrolling back to the top here, we have two transactions for Bowie that we signed a contract to provide legal services to Johnson Corporation. And then the adjusting entry. Here are the chart of accounts for Bowie, and then also some of the descriptions for entering these into our T accounts. So what we're going to do here is first journalize our transaction. So on September 1st, we signed a contract to provide legal services to Johnson Corporation for 6 months. So we received cash in advance um, for $12,000. So this is going to go in our cash receipts journal. So we're going to come down here and put September 1. And now remember, for Bowie, they're the ones that need to provide these legal services. So this is actually, if we look at their chart of accounts, I gotta find where we're at here. Here we go. For them, what it actually is these unearned legal fees right here. Because it is technically considered a liability for them until they actually perform those legal fees. So the account title here is unearned legal fees. Our document number is R345. Unearned legal fees, remember, is a liability, so it's going to be credited for that full $12,000, and cash is going to be debited for $12,000. Okay? Good, good, good. Now we come to the end of the year, December 31st, and we need to journalize the adjusting entry for legal services performed. So remember, we signed this, I shouldn't say we signed. Well, we kind of did. We signed a contract to provide them legal fees on September 1st. So we provided legal fees September, October, November, and December. So 4 months worth. So when we come down here, we're going to put December 31. And then for our adjusting entry, what happens is we are going to transfer from unearned legal fees to the actual legal fees under revenue. So when we look here, under revenue, we have legal fees here because it's not actually sales, it's legal fees that we're getting this from. So what we need to do here is we need to take an amount out of the unearned legal fees. So we're reducing that liability. And the credit is going to be to that revenue account for legal fees. So those are our two accounts that are affected with our adjusting entry, but we need to figure out how much goes there. So remember that what we need to do is we need to take the total amount of $12,000 and we divide it over the number of months that they prepaid for, which was 6. So $12,000 divided by 6 is $2,000. $2,000 per month. Okay, and remember I said that September, October, November, and December is 4 months worth. So 2,000 times 4 is 8,000. So we're going to put 8,000 in here and 8,000 in there. So those are the journalizing of our two transactions. Then we're going to come down here and update some T accounts. So it says we're going to use the information that we just put here for each journal entry, putting the date, the type of entry. Again, we might need to reference this description for T accounts, the balance, adjusting, closing, and reversing. And then if no entry is required, we're just going to leave it date. So we're going to record these in the order in which they were journalized. So our first one, remember, is unearned legal fees of $12,000. So we come down here to unearned legal fees. That was a credit. Nothing is going to go in that second spot, and it's $12,000. The opposite of that was the debiting of cash for $12,000. Okay. Then in the adjusting entry, we debited unearned legal fees on December 31st. So this is an ADJ for adjusting, $8,000. And then legal fees over here gets credited for $8,000. So if you notice right now in unearned legal fees, if we had $12,000 and we debit it, that means unearned legal fees still has a balance of $4,000. You just want to remember that as we keep going. Okay, so let's come down here and let's look at the other side of this equation, which is the Johnson Corporation. These are the ones that paid for those legal fees. So they have prepaid from a Bowie law firm to receive legal services for 6 months. So they paid cash in advance of $12,000. So they're the ones that have, instead of having a liability, these guys actually have an asset. They prepaid those legal fees just like you would for prepaid insurance. So we're going to come down here into cash payments, and we're going to put September 1 in here, and we call this prepaid legal fees. If we looked at their chart of accounts here, which we can do, under assets, you're going to see prepaid legal fees. This is the one we're working with. Okay, so prepaid legal fees, check number is 672. Prepaid legal fees is going up by $12,000 and cash is being credited for $12,000. Okay. Now, on December 31st, we also have to do an adjusting entry for them. Okay, so they have actually over the past 4 months, again, September, October, November, December, have used up, excuse me, some of those prepaid legal fees, and those turn into an expense for them. So if we were to look at their chart of accounts under expenses, we would have legal fees expense right here. This is the one we're working with. Okay, so we're going to go back to that transaction, come down to our general journal. We're going to put in December 31. And so that prepaid legal fee is going to turn into legal fees expense. And the credit is going to go to that prepaid legal fees because that's an asset. We're using that asset up, so it has to be credited. It's actually for that same $8,000 amount. Remember, if we took $12,000 divided by 6, the 6 months that they prepaid, that's $2,000. And then we used it September, October, November, December. So that's 4 months. 2 times 4 is 8. So 8,000 debit, 8,000 credit. Okay, so those are our 2 transactions. We're going to put those in our T accounts here. So we're starting with the prepaid legal fees. That's going to get a debit of 12,000. So we have September 1. Nothing goes in that balance. So 12,000, and then cash is going to go down by 12,000. Okay, and then we're going to transfer some of that to legal fees expense. That is an adjustment ADJ. And then prepaid legal fees is going to be credited as an adjustment for 8,000. Again, showing a balance in our legal fees of 4,000. Okay, so when we come down here, there's a couple of questions at the very bottom that says that the balance in the prepaid legal fees account would be 12,000 minus the 8,000. So we have a balance of 4, which means that in that count, there are 2 months of remaining prepaid legal fees. Because remember, September, October, November, December has already been used up. That's 4. And so we have January and February still to go. So 2 months of remaining prepaid legal fees. So those are some examples of deferrals. I think deferrals are a lot easier than accruals just because with deferrals we don't have reversing entries because we aren't having a receivable or a payable account be affected here. So you can head over, do the 21-2 on your own, and then your application problem as well.